pre-FOMC market day. So I just got up from my seat and went out and mowed the lawn. I came back and it was the same dull market. Three little offenders in my portfolio caused an end of the day sag. FUU.V, the uranium company, and a couple gold stocks, Orla and OGN.V, but mostly it was just the same old, same old. So I'm back and taking a look. Nothing has changed on GDX, but that also means nothing has changed with the bearish potential of the big head and shoulders. Everybody knows the Fed is not going to raise rates tomorrow, so who knows if there's a sell the news, buy the news, or big fat nothing burger on the news tomorrow. But getting back to the technicals, the job of the little inverted head and shoulders is to undo this breakdown below the neckline of the large head and shoulders, which you'll recall would theoretically target below here. I think it was in the 21s, so it would fill that gap. But it's also a gap we've noted does not have to fill, and was a breakaway gap that started the trend, which with the hold of the higher low to the March low, the trend is still intact by the hair of its chinny chin. So we're still waiting. I even thought about hedging a little bit. I'm still thinking about it, but I think it's going to be easier for me to just sell some positions, cash up further if this thing starts to fail, than to mess around and lose would-be gains by having the hedge in there if this thing decides to take out the neckline and the 200-day average. So I'm just sitting there with a lot of cash and watching the two head and shoulders battle it out, the little guy, the big guy, bearish, bullish, theoretically, each of them. So what do we have here? A little gap fill, so that's okay right there. I'm calling the gap where that candle's wick ended at the high. So this candle's wick came down and ticked to fill if we want to get technical about it. RSI looks fine, pulling back as it normally should toward its 20-day moving average. MACD is still trying to go positive. And again, so if the big guy plays out and we have a big bearish event, we'll watch for this gap to fill. The measured target is in the 21s, I believe. That's in the 22s, so that would be nice to take that out and probably see other markets fall apart too. That would bring opportunity if we're prepared. But back to the chart once again, we have the little head and shoulders still trying to make its way. Today's volume was nothing to be afraid of. The up volume that drove the shoulder was better than this volume, so that's fine. And again, we'll go back and remind that the fundamentals are not good for gold mining right now. They're just not. They're not disastrous. They're just not good. So this is a play on the anti-US dollar along with other items that would rally against the dollar. And the target is 40 and a gap fill up here, 40 plus and minus. Let's take a look. We didn't look at the weekly chart, the longer term chart last time. So I want to take a look at that. There it is. And let me get rid of these moving averages that don't apply. I don't use them on weekly charts. I will keep the little EMA in there, EMA 20. So there's our big head and shoulders. There's the little guy all obscured by the changing chart here, the changing format. But here's the neckline, broken trend line. And here's a recovery trying to take that back. It's not the sweetest looking situation, right? I mean, the trend is the trend, and despite the little pattern forming here, the trend is still down from the March high. And that's true on the daily chart as well, obviously. So it's a pretty important moment here. You know, volume is moderate. Let's see here. We come down here, test these lows. Fine, I'll be ready for it. We should all be ready for it. We who would trade gold stocks, we who would do the unadvisable, which is trade gold stocks in search of one day the great riches that they hold for us. So the story goes. Actually, we want the fundamentals to come into play. So one other thing I want to talk about is how if this does fail and it's a deflationary situation and commodities drop and stocks drop and the Fed weakens and panic enters the scene, that would almost positively send gold rising versus those cyclical markets. And that would be an improvement in the fundamentals for gold mining. So I guess what I'm saying is, sure, we can get excited about the little head and shoulders. Okay, yay, it's a little bottoming pattern. It could break the correction. It could also fail here. And if it does, it's going to be important to look at this as an opportunity to buy a sector getting sold if the fundamentals are screaming higher, which I believe they would be. I don't think the gold stocks are the only market that would drop in such a situation. So 2 things to watch for. We could negate this thing and go with the anti-USD trades and go to 40, and that's a selling opportunity. I will be selling if the fundamentals don't get any better. Or we could drop to a buying opportunity, and I will be buying if the fundamentals do get better, which I expect. So we'll wrap it up here. Take care now.